Two VA loan estimates can look almost identical and still put you on very different financial paths. The lowest rate is not automatically the lowest cost loan. I'm Vance Scott, a VA home loan educator serving Florida and Georgia with more than 25 years of VA lending experience, including manual underwriting. If another lender gives you a stronger written estimate, bring it to us. We'll compare the closing costs and interest rate line by line. Now let's look at the 5 numbers that matter. Before we begin, pause here and download the VA Loan Educator app at valoaneducator.com. Scan the QR code or enter the address shown on your screen. Before comparing numbers, make sure both estimates describe the same loan amount, term, property, down payment, and VA loan type. Compare offers issued as close together as possible because rates can change daily. If the assumptions are different, the comparison is not reliable. Number 1 is the interest rate and the points attached to it. Start on page 1, then check section A on page 2 for discount points. A lender may show a lower rate because you are paying thousands up front to buy it down. Ask for the same lock period and the same point structure. The question is not just which rate is lower, it is what does that lower rate cost me and how long will I keep this loan? Number 2 is the total monthly payment. Compare principal and interest, then compare the estimated total monthly payment with taxes, homeowner's insurance, and escrowed items. VA loans generally do not require monthly mortgage insurance. If you see a mortgage insurance charge, ask why. Also identify expenses that are not escrowed because you still have to pay them outside the mortgage payment. Number 3 is total loan costs, especially the charges controlled by the lender. Compare section A, including points, origination, underwriting, processing, application, and rate lock fees. Then compare section B, services you cannot shop for. Do not pick a lender simply because taxes or insurance were estimated lower. Focus on lender charges, required services, and lender credits, and ask for an explanation of every meaningful difference. Number 4 is the VA funding fee. Verify whether you are exempt, the percentage being charged, and whether the fee is paid at closing or financed. The fee may depend on the loan type, down payment, and whether this is your first or a subsequent use of the benefit. If financed, it increases your loan balance and the interest paid over time. On a VA purchase loan, the funding fee may generally be financed, while other closing costs normally cannot simply be added to the loan. Number 5 is estimated cash to close. This is not the same as total closing costs. It accounts for the down payment, closing costs, deposit, seller credits, lender credits, and other adjustments. A lower cash to close figure may come from a lender credit tied to a higher rate or from optimistic tax and insurance estimates. Confirm that both offers use the same deposit, seller credit, down payment, and funding fee treatment. When 2 offers still look close, go to the comparison section on page 3 and find the line labeled "in 5 years." It helps show the trade-off between paying more upfront and accepting a higher interest rate. Use it as a tiebreaker, then ask each lender to explain why its written offer is stronger. Remember the 5 numbers: rate and points, total monthly payment, total loan costs, VA funding fee, and cash to close. Then check the 5-year comparison. Subscribe for practical VA loan education, and if you want help comparing written estimates, request a personalized VA loan estimate review. Educational information only, not a commitment to lend. Rates, terms, eligibility, fees, and program requirements may change. Equal housing opportunity.